Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today from Fabi Lara, founder and publisher of The Next Big Rush. And we'll put a link to her sites down below this where you can check out both the Next Big Rush website as well as her YouTube channel, where she does a lot of interesting interviews and deep dives into companies and just looks at the markets and some of the takeaways and realizations she has, piercing through all of the news and all of the noise. And boy, Fabi, there is sure a lot of noise and a lot of news in the uranium sector right now. A lot of it is good noise and it's good news because there has been a string of news articles that we've covered in some of our prior discussions that were already bullish for the uranium sector. We already had less supply coming out of Kazakhstan from Kazatomprom due to acid and due to higher taxes. We already had the coup in Niger that was crimping the French supply and making some of the other development projects on hold. We already had U.S. sanctions and UN sanctions against Russia, but now we've got a wave of tech companies that are all looking at either bringing reactors back online, or most of them are looking at building small modular reactors with target dates of 2030. Let's dive into some of this recent news from the tech companies that have decided to go all in and go nuclear.
Yeah, Shad, thanks for having me on. So it's funny because every time that I come on here, I'm like, hey, the story's getting better. And it's not like I'm trying to sell this thesis or, this story of uranium, but it truly is getting better on a purely fundamental basis. This has nothing to do with my own portfolio. Obviously, it does reflect it. But when you look at supply and demand, what has happened to supply, and we can touch upon that briefly. There isn't much to be said about supply, and that's good news for us who are long. Very sad news for shorts. And when we talk about demand, it's just I scratch my head, and I could never have imagined. I think most people in this industry and in this commodity could not have imagined that things could get even better in 2024. Obviously, when people hear that, they immediately think that there's going to be a massive rebound of stocks. And I think we're seeing the start of something here. If you pull up most equities in the space, you're going to see that on the technicals they are really rebounding. So that's something that we can also touch upon. But this is coming in with something fresh that we haven't seen before. So it's very likely that you're going to see a lot of generalists come onto the scene in uranium right now because Google and Microsoft and Databank and Amazon so far have announced that they are either signing deals with known utilities such as Constellation, switching on 3 Mile Island again, or they are actually signing deals for the build out of new small modular reactors. Now, they all decided to announce this for some bizarre reason on the same week, right? And this is massive news for people who have been just looking at the disconnect between supply and demand and looking at the demand going forward and just looking at the fact that utilities have been slow to contract and their cupboards are getting more and more bare, and they're going to have to come to the negotiating table and talk to suppliers and say, okay, here's what's up. This is how much we need. And suppliers will have to, because now it's very much a seller's market, they will have to stand their ground and ask for an amount that is worthy of their goods, of the uranium that they hold, whether that's above ground, but most usually in the ground. And so with this AI ball that nobody expected, it's not out of left field. It's kind of like out of this world. Nobody really thought that tech would be such a big driver for uranium, but now it started. People are making the connection. They're looking at the AI revolution. It's not going anywhere. That's my personal belief. If you've interacted with enough tools, you'll understand very quickly that this will change the world, probably more so than the internet has so far. And then you look at, okay, what is the infrastructure for that? Well, the infrastructure is not what we think that it is. It's not OpenAI's, intelligence, their LLM. It's really what powers that. Without anything powering that without what they call compute, it doesn't exist. It can't do anything. It can't go anywhere. And so these companies are quickly understanding, okay, we need to go all in on artificial intelligence, first of all. And in order for that to happen, we must have the physical infrastructure to have the power supply. And the current grid is not prepared for that. Now, second thing that we could say about that is that as far as I know, all of these deals are being signed for plants in the US. That is kind of funny because I've been a proponent of US based projects for years now. And the more we look at how the market is turning out, the more I see that companies and projects in the US will get a disproportionate amount of love and attention. And it's party time for uranium investors for sure.
Well, and in the US, just to add even another layer onto it, Fabi, the Biden-Harris administration and the Department of Energy, so the US Department of Energy, applications for up to $900 million in funding to really spur more build out in the US, the deployment of Gen 3 reactors and also small modular reactors. So $900 million in funding. And then when you look at some of these deals, like you say, the Microsoft deal with Constellation for 3 Mile Island, the Amazon deal with Dominion Energy for small modular reactors, Google with Kairos Power for small modular reactors, and also DataBank with 3 modular reactors. I mean, you have all of this US growth, and then you have US equities, to your point, that are looking for sourcing and supplying these utility companies. Do you think that this actually spills over, Fabi, into Canada where there's not going to be enough US supplies? So we're going to have to source some of this, not just the U3O8, but also possibly helping with the enrichment and the UF6 and the enriched uranium fuel? Are we going to need to bring Canada into the mix here to supply all of these goals and initiatives, especially if more companies pile on?
That's a great question, Shad. And most importantly, I think we need to understand that because of the bottleneck of downstream uranium, that's the reason why we are not looking at 100 plus uranium per pound in the spot market. Now, I want to add a caveat here. Numerco, which is a company that supplies prices on a daily basis, and I think it's really every 2, 3 hours they supply a price on their website. They have actually just hid their prices behind a paywall. And for now, you can get it on an app on your phone for now, but I'm pretty sure they're going to close that down as well and put it behind a paywall. I think there's a reason for that. I think there's enough attention that they know what they have and they want to charge for it. And the other thing is the way that contracts are being signed right now, it makes it so that for a lot of these contracts, $100 is about what they're going to get for what's being contracted right now. And the reason why I say this is because they are really often in a range, right? Nobody in their right mind is going to sign a contract today that says, okay, we're going to deliver, I don't know, 1 million pounds of uranium, 500,000 pounds of uranium to this utility. And we're going to charge, I don't know, pull out my calculator here, $89 per pound. Like, that's not how it works. They have a floor and they have a ceiling, and some of it tracks the spot price, to some extent, if that's what they want to do. And when you look at what's being contracted and the gossip around the uranium community of investors, is that the medium, the average is actually about $100 per pound, contracts that are being signed right now. So price is moving. Now, it's likely that we're not going to see price move as obviously, because it's mostly being done, behind closed doors. And by the way, nobody needs to report on these prices. So if I'm selling, 1 million pounds of uranium to you, Shad, I don't need to tell anybody. And if a company come and asks me for that information, I have a few options. A, I can say nothing. B, I can lie. And C, they can get one side of the deal and hope that that is the correct side, that's the truthful side. And so that creates a very interesting opportunity, I think, for investors because something's up. Things are moving, right? They're not moving in the way that we thought they would. But I think that because the demand right now, as we've just mentioned, it's so much larger than what we predicted that we're going to have to stretch out our numbers, our expectations. And for our own portfolio's sake and for our own trading, I think the expectation is that it would be nice if we could go up a bit more slowly. Because I think that if utilities just come to the table and contract what they should be contracting right now, I think the price would jump too quickly. So yeah, we'll watch the price for sure on that. And hey, if we can't get the price, the spot price, but behind a paywall or something like that, then we're just gonna have to pay up and see what's happening. But the writing is on the wall, and like I keep saying, there is no substitute whatsoever for uranium so far. Downstream has been a bottleneck, but bottlenecks don't last forever. And the fact is, utilities do contract whether there's a bottleneck or not. At some point, they're going to either free up, the bottleneck. And I don't think we can be picky. Let's be honest. I don't think we can be picky on where the uranium comes from. I know we talk about Russian embargo and things like that, but the reality is I believe that governments should, doesn't mean that they will. I believe that governments should be placing their own national security, including energy security, over and above their political position. So that's just my thinking. And it might come to that, stuff that comes from Russia goes through India, through other different countries in the East, gets a different label put on, and then eventually makes its way to the West. That's how it's been working. And they've been able to sell a lot of goods, whether they're under sanction or not. So I'm not sure that's going to be an issue. And we'll see. We'll see if Canada can actually step up and be a player, because in the mining side of things, Canada is a big player. And downstream, I think it's an opportunity for it to grow as well. I mean, this is the perfect setup. If anybody who's involved in the nuclear business right now should be just jumping for joy and making expansion plans, whether, that's enrichment, whether that's mining. I think the whole nuclear fuel cycle is going to see the waves that will come, and they'll be very positive for sure.
Well, and you make an interesting point about the taking a more measured approach rather than a rocket ship. I don't think we really want a rocket ship because then what happens is the rocket crashes afterwards. We saw that happen in lithium where it got so quick that it shot up and companies got so over their skis that it quickly fell back apart. And so I think that that is the danger of going up too quickly, where when you look at a market like gold, it is stair-stepped up gradually and then based and then stair-stepped up and then based and then stair-stepped up and then based, sometimes to the frustration of investors, but at least it's actually started a legitimate bull market that's got some traction. So with this contracting cycle, it's a little different because people are not used to the mining companies signing offtake agreements with utility companies. It's more of a unique situation because that doesn't even really happen with oil as often as it does in uranium. So it is different in that if you've contracted your uranium and then the price keeps going higher, you've already, in a way, put on hedges on your pricing. So how are you looking at that as far as companies that maybe do some contracting but leave some open to spot, or maybe keep some of their supply available to catch the elasticity in the pricing?
I think that a company like Cameco that has done that in the past, they did so out of need, when the market required them to do so. I think they were very heavy on hedging. People say that they hedge too much and that they're going to miss out on the upside here. I think that some of that has changed. I'm seeing comments from Cameco for the first time in a very long time saying, hey, we need prices to be higher for this to actually make sense for us. And so them not, being willing to ramp up their production and things like that, I think is a clear signal that, it was good while it lasted, but now we're going to require more and more out of the contracts and out of the pricing, that the market is thinking is a fair price. So I would take a second look at Cameco if you were hating on it, even about 1 or 2 months ago. I think that they've improved their policies around that. So it's something that if it comes out in their financials that they've really stepped up and have signed better contracts, then I think it's also a massive sign to the other players, the smaller players, to be a little bit more bold in asking a fair price for what they have, because who's coming online? I mean, what supply is coming online? Maybe something out of Uzbekistan. It's never as big as they say, and it's never as quick as they say. But who else? Out of Niger, Dasa isn't coming online anytime soon with a coup there. There might be something coming out of Namibia, but who knows when? And even the US players that I love so much, how much are they actually producing, and how much of a dent does that make in the yearly supply? It's peanuts. I love it as a thesis to invest because they're so small, so they can grow on their own. But when you look at the thesis, will they disturb the thesis by just producing more? No, the US literally does not have enough uranium capacity in order to disturb that. And what I mean by uranium capacity is anything from the way that deposits are laid out, usually lower grade and more scattered, smaller deposits, to personnel that can actually run the mining. So yeah, the whole thing is set up in a way that supply cannot come online in any massive way. Trading is going to be more and more important. I believe that Goldman Sachs or JP Morgan has, started up their uranium desk again this past week. And we'll see where this takes us. But I think we're going to be talking about uranium for much longer than I anticipated when we started. This is really, really exciting.
Well, and I think it's interesting too, because we always hear, the cure for high prices is high prices. And what that usually means is that if prices get high enough, there's a supply response that comes in and floods the market and brings the pricing back down. So in oil, if the prices spike up, it's pretty easy to drill some new wells and hit black gold and start putting the oil out there. Nat gas, if the price spikes up, it's very easy for US producers or even Canadian producers to ramp up the nat gas supply. But it's not like that in uranium. And so to your point about the US, there's a lot of companies that could produce 1 to 2 million pounds of uranium per year that could maybe jump it up to 3 or 4. But it's not like they can go to 10 or 20. And when you look at Canada, the rub there is that there's no projects that are even close to production. Everything is years away. Everything is 2027, 2028, or 2029. So, Fabi, what about 2025 or 2026? Where is the supply going to come from? And if there isn't enough supply, I mean, what does that mean? I mean, in theory, you should see higher prices, but even if prices went to 120 a pound or 140 a pound, there's still no supply. So, what is the answer here?
Well, the answer is to hope that somebody somewhere has a stash. If you're a utility, and the hope as an investor is that nobody has anything and that the price goes crazy. We say we don't want to spike, but at the same time, there is always supply at a price. I think you're completely correct. That's one of the fundamental, I guess, bases when we start investing. It's supply and demand, plus the fact that, supply and demand is I guess, the controlling factor of each other. So if there is enough demand, there will be supply. If you can make a bear case, I guess, for it is to say, look, there are big piles of uranium somewhere that will come online when necessary. This usually happens in a time of crisis by countries that have material, and countries do have material, we know that, but there would need to be such a big reason for that I can't imagine the political will to sustain it. So I can't imagine a country like the US or Russia or China saying, look, we have these reserves and they're for our national security, but hey, we'll sell it to you, a utility out in the West that has nothing to do with how we run our country. And when you look at the East and West divide, this actually makes it even worse. The Eastern countries have been preparing for this. China has a lot of supply because they've been doing deals with Kazatomprom. Kazatomprom pretty much is almost vertically integrated, with China and Russia. And so you look at where the uranium is going to and who it's going to, does China want to sell? Well, why would they want to sell if they're building all of these plants? I'm not sure that they're going to. But if they decided to temporarily in order to, make the price go down, they would. But then what? What would they do? How would they power their plants? And one thing that obviously this is something that's said within the community. It's not something I figured out by myself, but technically, when you have a new power plant coming online, the requirements of that new power plant are about 3 times as much as one that is already running. It's almost like you're putting in a larger amount of nuclear fuel into the first load. And so if they're having all these build outs, why would they dump in the market? It makes absolutely no sense. And they don't produce enough of the stuff in order to make that make sense. So I don't think there's a great answer. Maybe there are enough traders that have enough in volume that they could supply the market. Maybe that's something. People say that, the Sprott vehicle, Sput, maybe they'll sell. In order for them to sell, they have to signal to the market well in advance, because as it is in their way of operating, they cannot do it legally. And so they would have to ask the trust holders, can they do it? And then they would have to vote, and then they would have to be able to do it. So you would be able to get out with plenty of time if that came to it. Or there could be a technology advancement. This is my bare thesis, that there is a technology out there that will get good enough that we don't need nearly as much uranium for the nuclear fuel. Now, in saying that, I'm kind of pulling something out of a hat and not backing it up with, science. I don't know that this exists, but it could exist. And if it does and it catches on and it's commercially viable, then all bets are off and uranium dies completely. But apart from that, I mean, I really don't see it coming quickly. Maybe in a few years' time, there will be enough of, maybe byproduct or maybe the technology in order to, say, extract uranium out of seawater. Maybe that's, a few years away and not 3 decades or 1 decade, depending on price. So if price gets there and we can do it quickly, maybe. I'm not convinced, but people need to know that of a bear case, not having a bear case whatsoever, I think is very dangerous.
Well, the biggest bear case for nuclear power has been thorium reactors, as far as it's still nuclear, but it's not using uranium, or fusion. And fusion's been 10 years away for the last 60 years. So I don't know that we're getting closer to either one of those actually happening imminently. And so while there is a bear case, I mean, I guess the biggest bear case would be if all the data centers were called off and people decided they didn't need this much energy demand. But there's still so many other factors of the world still electrifying globally. There's still so many power plants being built just for the basic necessities, even if there wasn't the AI data center need, or if there wasn't the EV need, or if there wasn't the renewable power need of solar and wind not being able to carry the load and needing that base load power to be backed up by nuclear. Even if there wasn't all that, just the basic need for humanity to have more electricity is a pretty strong bull case. But all these other factors coming together are almost making it an insane bull case to the point where I don't know where the supply is going to come from. So let's even dig in further to the mining stocks, because they are the supply. And when we look at the U.S., we've talked about there being, about a half dozen small ISR producers where they're injecting fluid in the ground and getting the uranium out, less disturbance. It's really pipes and pumps. But there is a lot of hard rock mining that exists in the United States from the past cycles, because in the 1950s and 60s and 70s, there was a booming uranium business in the United States. So those deposits are known. They're still out there. And I've asked so many people, do we need to explore for more in the U.S.? They said there's plenty. There's hundreds of millions of pounds already found. It's just a matter of the will and the money to get them out of the ground. We'll start with the U.S., then we'll go to Canada next. But in the U.S., Fabi, if the price was 120 or 140 a pound in uranium, do you think that's the kind of price incentive where some of those hard rock deposits would actually get developed in the U.S.?
I believe so. So I spoke to a kind of expert in the field when it comes to uranium grades and types of deposit. And that was their vision about a year. I want to say about a year and a bit ago. And this is what they said. Look, prices need to be above 100 for some time. So with certainty, so that you can sign contracts, above 100, 100 to 120, they said, in order for some of these deposits, known deposits, to come online. Now, I want to call your attention to the fact that the US doesn't need any more exploration per se. But by the way, this was probably said before this last week, before all the AI data centers. But beyond that, what I want to remind you of is just because we know where the deposits are doesn't mean we know about the quality of these deposits. So this is a story that goes back to, the company I'm involved in, sit on the board of Rush Rare Metals. We have a project down in Wyoming, which is a great jurisdiction, by the way, within the US for uranium mining. They absolutely love uranium mining there. It's kind of weird, you go into a town and they're like, hey, when are the mines coming back? It's like the opposite of NIMBY. And what we know is what geologists knew up until, I want to say, the 70s. I don't know if any true geological work was done in the 80s and beyond. And so if you just take a look at how much better everything has gotten in this field of geology, within that time frame, we're probably looking at going back to the deposits and taking a second look at them and maybe upgrading what we thought was there or what we know to be there. So I think that in doing that, companies in the US are going to get a massive lift. And I think there might be even a premium for, US sourced uranium, because you don't have to deal with the whole politics of everything else that's going on around the world and all that risk that still persists nowadays with mining uranium and transporting it, especially. So yeah, the US is still very interesting to me in that sense. And I do believe that exploration is going to keep happening within the US. They're going to continue to find uranium, but these are not greenfield sites. They're all brownfield, as far as I know. I haven't heard of any project being found at a completely greenfield location in the US ever. So,
Well, and I think the other issue is even if we know where the deposits are, there are a lot of First Nations that are pushing back against some of the projects. In particular, the Navajo in New Mexico are very anti-nuclear source there, and Energy Fuels has been having a hard time even trucking some of the material to its White Mesa plant just for that reason. So there's a lot of deposits that are inside of enCore Energy, for example, that they would have a really hard social license to get out of the ground in certain states. And that's the same kind of thing that you see in parts of Utah and even parts of the Dakotas, where there's certain groups or certain areas where you'd have a little bit more pushback. Wyoming and Texas are really the two best states in the U.S. to get uranium out of the ground and do it where, like you say, it's the reverse of NIMBY. They're excited about it. But let's shift up to Canada. Let's look at the Athabasca Basin, the Thelon Basin, much higher grades, much more concentrated, but lots of problems with water. It's also really deep. It's under sandstone. And then if you're in Cameco, you're doing freeze walls to keep the water from coming in. There's a very few deposits that don't have major water issues. Arrow's probably the biggest one from NexGen, but again, it's still years away from production. When you look at Fission that was just acquired by Paladin, it's underneath a lake. So talk about water issues or concerns that you have to deal with. And a lot of the other Athabasca Basin projects, there are some that are at surface that don't have as much issue that could maybe be open pitted, but it's also in a climate where open pit mines are getting more challenges on a social basis. So what is the reality of Canada actually getting some of these projects possibly fast tracked? Like, could Denison's Phoenix project be fast tracked where they just start doing ISR quicker if the money was there? Is there any other projects you see on your radar that could be fast tracked, let's say in 2 years, 3 years, anything they can do to speed the process up?
so I think Denison's project is the most likely to look like it's going to be sped up. Whether that's going to be successful, that's a different matter altogether. Yes, they have the ISR component. I'm really rooting for that. By the way, I really, and I'm not even a shareholder, but I love seeing, advancements and technology come into this business. And it's really exciting to see. I hope that they get a massive deal where they get either, bought out or, a massive investor comes and says, let's do it. And both Cameco allows it. I said the quiet part out loud, sorry. And the government kind of fast tracks it for the sake of jobs and, economic gain. And the thing that it will come down to as well is the fact that you still need budgets and people. So they can get the money if, uranium keeps on being, the hot girl in the club. The thing is, okay, so how are we going to build this? Fine, it's ISR, but it's ISR in the middle of nowhere kind of thing. And what are the technical difficulties that they might find when they're building it? Because that Denison, they're a development company. So they would have to partner up with a company that would know what they're doing, but what they're trying to do is very new. So who could they turn to that knows what they're doing? And would they be able to do what they're doing at scale? That's the big question with Denison. There aren't any other projects that I could say, look, this is very feasible and they could be producing very quickly. What could happen, like you said, is if the government fast tracks the licensing and permitting part of it, then you go back to, okay, who's going to run this? And that has been an issue even for Cameco. So if you see Cameco struggling with something, you can assume that the smaller companies are going to struggle even more with it. I believe that one of the mines that Cameco put back online in the last 5 years, I can't remember which one it was because there were a couple, it was about 18 months late, according to their initial plans. So, yeah, that it doesn't look good. There are fewer and fewer people, young people, working in mines and wanting to work for, the mining industry. I mean, what are we going to do about it? Are we going to maybe get robots to do the work? I don't think we're there technologically yet. So we'll see.
Well, the other issue that you bring up, besides the lack of personnel, is really the lack of majors. Everybody always talks about Cameco because there's no other majors. If you look at gold companies or copper companies, you got like dozens of majors here, or at least some big mid tiers that can come in and save the day. There are none in the uranium space. I mean, Cameco is it, and everybody else is either a developer or a small producer. Now, there are some big players in the base metal space like BHP, but they just announced that at Olympic Dam, they're going to have less production. So, yet it's another driver for the uranium price and less supply. We saw Rio, which a lot of people said Rio Tinto, maybe they could be a player, but they just made a big acquisition into lithium instead. So, it makes you wonder who are the leadership in this space that can actually get these projects developed and built, and could maybe some of the contract companies in the US that did the ISR mining go up to Canada to help with Denison? Are there any other base metals or maybe battery slash energy companies that want to branch out into uranium? Or could there be oil and gas companies that come back into the space that have those big budgets, but still not the personnel? Because in the 70s, there was a lot of oil and gas companies in the space. Could that be a solution?
So I think you just answered it yourself. I think the money can come from all the sources that you've mentioned. And, we've been talking a lot about the oil companies coming back to uranium, but it goes back to who is going to run the mines. And you have Cameco, you have Kazatomprom, and there isn't much beyond that. I mean, Orano, they are pretty much cut off from their Niger pounds. So they're looking to what the heck they're going to do next because they used to get quite a bit of uranium from there. And they're probably also on the lookout. So, maybe Orano is an answer there to some of that, but I don't know how much they can do. It'd be great. Can you imagine like having Orano by Denison and then have an ISR in the Athabasca Basin? That would be amazing. I would love to see that.
Well, we can hang our hope on Australia and go to the land down under. They do have Boss Energy that is bringing projects on, and then there is, that Olympic Dam, I believe, from BHP is in Australia, but there are some other deposits in Australia. I'll admit that I'm not as up to speed on all the development projects there, but is there anything on your radar in the Aussie stock world that could also help augment supply?
Yeah, so there's a Paladin. Paladin, buying Fission is a move towards production, I believe, but I don't know what else can come. Deep Yellow is one that I looked at years ago. I haven't looked at them, recently, so I don't know what stage they're at currently. But nothing comes easily in this business. I mean, where do you go to school for running a mine that produces uranium? It's much easier to learn how to mine, I don't know, copper or gold or silver. But when it comes to uranium, it's a whole different ball game, from the permitting process to the handling of the material to the mining. The whole thing, it warrants very specific training that takes a long time, that's very expensive. And because it takes a long time and expensive, whatever you think you're going to produce in your first year is usually, disappointing.
Well, and even Paladin taking over Fission's in Canada, and then most of their operations are in Namibia. And same thing with Deep Yellow. It may be an Aussie company, but it's in Africa. So the reality is, I don't know if there's a lot of Australian supply, but I do think there are some deposits there, and maybe we're just not familiar with them. So for anybody that's listening in Australia, let us know in the show notes if there's any other Aussie companies that should be on our radar that actually have viable development projects that could come online quickly. So I guess, Fabi, we're going to have to hang our hats on exploration. We're going to have to look for some deposits that are high enough grade and maybe have enough combination of elements that allow them to be fast tracked. One that comes to mind that we did see the last couple of years was IsoEnergy's Hurricane deposit, where they discovered it and grew some of the highest grade resources in a very relatively short amount of time, just a couple of years. Do you think we could see more discoveries like that, where maybe we leapfrog some of the known deposits with deposits that are even better and maybe more amenable to quickly fast tracking them?
I would love to see that. To be honest with you, I think during the last season, it was a bit disappointing that we didn't have more discoveries in the Athabasca Basin. I don't know, maybe they're coming from, the summer drilling, but I think there's been a lot of money going into these juniors, and some things have been advanced, but nothing, truly massive. I guess the best player this past winter was probably CanAlaska. People say that, hey, it seems like what they're finding is way too deep, etc. And you can make an argument for or against that, but there hasn't been that much that gives you hope that you're going to have anything better than what we know to exist there, especially when you look at Arrow. That is a deposit that is very difficult to beat. So I hope that somebody finds something. But even in the way that deposits are found in the Athabasca Basin, and I go back to, a former partner company of mine was Stallion Uranium. And people don't realize that in your first campaign, all you're looking for truly is whiffs. You're looking for maybe some uranium somewhere in small amounts, but you're looking at the structure of the deposit, and you're looking really at it's not really truly a deposit yet. You're looking at the geological structure of where you think the deposit may be, and you're looking for clues into what could be there and where it could be. And it takes several years usually to find a worthy deposit in the Athabasca Basin. And I think people need to understand that. And so there are a lot of new players in the Athabasca Basin. And I guess we shouldn't be disappointed, technically speaking, that they don't find much in the first year, because it usually takes 3, 4, 5 years. I mean, talking to the guys at F3, the first whiff of uranium was in 2014. And then they really made, the big discovery, I think 18 months ago, a year, 18 months ago. So it takes time. It takes a long time, and it takes a lot of money. So these deposits have better come up soon. And I think the Thelon Basin has a decent shot because it's very similar, geologically speaking, to the Athabasca, but there have been a few deposits of lower grade than the Athabasca found so far. So I'm excited for whenever we find the Arrow in the Thelon Basin. So let's hope for that.
Yeah, it's a great point. And there's a few different companies working in the Thelon Basin. And really, Orano, that you mentioned earlier, the big French conglomerate, has done a lot of work there on their Kikavik project. And it's sitting there. So they technically could come in and start developing that. But there is Forum Energy there. There is Arrow Energy, and there's a few other smaller companies that are also checking out the Thelon Basin. So fingers crossed they find the next big discovery, and some of them still have results that are pending, so we're waiting to hear. But to your point about F3, I think that's a good one, Fabi, because they made that's probably one of the more recent, along with IsoEnergy's Hurricane, the F3, the JR zone, that high grade area of their Patterson Lake North project, was a new discovery that really got the market's attention. And I'm just wondering if we find a few more of those, could those maybe jump in the batting order a little bit? But as far as people looking at the space as investors, how would you be looking at allocating funds if you were just trying to get access to it? Would you play it through the ETFs? Would you get a couple of the US producers and then throw in some of the bigger producers like Kazatomprom and Cameco? Would you drill down into these exploration companies with the hope that maybe they make a big discovery? Where do you think the edge is for investors at this point in the cycle?
Okay, so I'm going to exclude the Australian plays because I don't know enough about them at this point, like you just mentioned. And like you said, I'm hoping that our Australian friends will come in here and sell us the idea of the Aussie plays. But my thinking would be it makes sense if you're a normal human being with a job, with a family, buy the ETFs. It's good enough. It's balanced enough. You have enough variety there that you will catch the big move without having to stress over. And then you only have the uranium story, the nuclear story to follow. That's easy enough, and people can do that way more easily. If you're a little bit more adventurous or crazy like myself, then I, would look into maybe not just doing that, but also taking a look at the US and all, the smaller companies there. I think there's gonna have to be an amalgamation of sorts because there are lots of small deposits in the hands of small companies. That makes no sense. We should come together and make bigger companies and get economies of scale, hopefully. And also have a sliver of your portfolio to the Athabasca plays, the Thelon Basin plays. Don't make your whole portfolio. Don't go crazy and go out and buy all these explorers that are pre-discovery, but buy a few. Buy a few that you think have good teams with a good history of discovery, and just keep a small side of your portfolio for crazy bets like that, because it's very easy to, when you're not participating in the discovery process, to come in very late with FOMO and buy high, not understanding the timing of how things are reported, and when they drill and when they raise money, etc., and lose out a lot of money because you don't understand where they're at. So if you keep a sliver of a few different ones, then you're likely going to participate in something if it pops up. But don't go crazy with that. So being fully out might be just as dangerous as having too much. So try to have a little bit of a balance there.
Well, I think that's sage wisdom there from Fabi Lara. And Fabi, it's great having you on the show as always. It's always interesting to dive into these uranium markets on the fundamental side, the supply demand side, but then dive into the actual companies and the choices on the menu. It's definitely a mixed bag. There's opportunity mixed with difficulty, but it's an exciting space and it does seem to be rebounding. And if people want to dig into some of the companies that Fabi is looking at in her own portfolio and some of the companies she talks to, definitely click on the links that take you over to the next big rush, either her site or her YouTube channel or both. And Fabi, well, I'm sure we'll get together in a couple more months and just see where the lay of the land is, but always fascinating and intriguing and insightful to have you on the KE Report.
Thank you so much, Shad. I can't wait. And I am sure we're going to talk about how much better the story is. But this time, I am betting. Oh, here's the thing. Let's bet something real. I'll bet a nice, I don't know, a beer or a glass of wine or a cup of coffee or whatever it is that you like to drink, that the next time that we talk, we're going to be in triple digits.
Well, I'm in agreement with you, so I don't know that I can even take that bet because I agree. But okay, I'll one up it. I'll say that we're going to be at 110 a pound, and if we're under that, then I'll buy you the beer or the wine or the coffee.
Done deal.